Look, the issue with ETH is if you want a decentralized network, you have to actually install a protocol, and it has to run unmolested, unmodified for 5 to 10 years before you can conclude that it is decentralized and censorship resistant. And ETH hasn't even got there yet. The clock on ETH won't start until after. The problem with ETH is after the merge, they've still left all sorts of questions. What's the issuance schedule going to be for the next 1,000 years? What are the staking rules? What are there's so much, there's such an ambitious technology agenda that the protocol never stops mutating. And the problem with an ever mutating DNA structure is you generally end up with a monstrosity, right? You can't keep mutating the protocol for obvious reasons. So ETH isn't really something that you could have an opinion on yet because they haven't stopped mutating it. If I had to have an opinion on what I see in front of me, what you see is this is something that was sold as an ICO to the public. The ETH Foundation, Ethereum Foundation controls it. It's an investment contract, right? It's been hard forked multiple times, and the hard forks aren't just hard forks to fix a fatal bug. They're hard forks that change the underlying monetary protocol. And the protocol keeps materially changing, and it is never stabilized.
Goodbye Monday blues, and hello good news. The total value of all cryptocurrencies in the market has climbed back above 1 trillion. The market cap of all cryptocurrencies is now almost as valuable as all the silver on earth. The price bump for Bitcoin brought the most decentralized cryptocurrency in the world to up to around 22,500, while Ethereum's gigapump helped it get close to 1,500. All of their work has led to a 4.8% increase in the crypto market as a whole, pushing it to a recent high of 1.02 trillion. Hello and welcome to Money Talks. In today's video, Bitcoin bull and CEO of MicroStrategy, Michael Saylor, updates about his thoughts on money, digital currencies, Bitcoin, and his honest take on Ethereum. Saylor also explains about the future of Bitcoin, why the global economy is in turmoil, and his thoughts about stablecoins. So without wasting any more time, let's dive right into the video.
The average person spending an hour or 2 hours says, Bitcoin, this crypto stuff, it's all just speculation. But, and even when I say this is digital energy, well, I don't know, 2/3 of the people in the crypto industry for the last decade, they don't understand what I'm saying. So there are people that have been in the crypto industry for a decade that have master's degrees in computer science, and they think that they're very informed. And they don't even understand what I'm saying, and they've got such a strong bias toward their point of view that they're unwilling to accept a new idea and even stop and think about it for a bit. So I don't think it's limited to non-technologists. I think non-technologists would look and you would say, okay, well, what is Bitcoin? Bitcoin is digital money. What is money? You remember you guys sat through 20 hours of my lectures on what is money? Okay, I'm going to tell you a secret. I didn't know what money was when Robert Breedlove asked me to go and do the podcast. He said, come on my show called What is Money? And I said, well, gosh, I guess I better think about what is money before I get on the show. And then I ended up writing out a 10-page outline, and it becomes 30 hours of discussions. But I got to the year 2020 without thinking about what is money. Most of the people in the world don't know what is money. So if you say it's digital money, that doesn't click. And then if you say it's digital property, most people don't know what property is. They haven't thought about the definition of property.
Bitcoin reclaimed the meme-worthy target of $420 billion in market cap, while Ethereum is sitting pretty at a total market cap of $180 billion, having added more than $20 billion in the past 24 hours. The last time the crypto market crossed the 1 trillion level was on June 13th. A reminder on market capitalizations: in the case of Bitcoin and most mined cryptocurrencies, the market cap refers to the total value of all mined coins. For Bitcoin, it's simple. Multiply the total number of Bitcoin mined since January 3rd, 2009 by the current price per Bitcoin, circa 22,000.
you got to think of money as a currency component and a property component. And the currency is the medium of exchange that you're going to use to pay your day-to-day bills. And that's a government monopoly. Every place there's a nation state, they're going to control the currency. And then the property is your long-term store of value, right? Whether it's your ranch or it's your collectibles or whether it's your company stock or whether it's Bitcoin. The cutoff, the clear theoretical cutoff, I think is 4 years. Like you want a really safe cutoff. Look at the 4-year moving average of Bitcoin. If you have money that you can afford to put away and hold for more than 4 years, you would be foolish to store it in a currency. Like even the strongest currency world, the dollar is the strongest currency in the world, but you would be foolish to store money for more than 4 years in the dollar. So I think that you look out and you say, well, stuff I've got that I want to hold for 4 to 40 years, I have to put in a property portfolio. And we're just going to debate whether you should buy a building, buy a company, buy a Bitcoin, buy a bunch of, art, right? That's another story. For less than 4 years, maybe you want a currency. I would think that, I would normally keep currency for 1 to 2 years, conservative 2 years. 2 to 4 years is being almost too conservative, but you want to be really conservative. You could keep 4 years of cash. Now, what would I say to people that said, why not use currency? Well, first I would say, if you live in Lebanon or Turkey or Argentina or Venezuela or anywhere in Africa or most places in Asia, you don't have the option to use the dollar. And so it's the wrong comparison. It's not a comparison of Bitcoin versus the dollar for the next 4 years. It's a comparison of Bitcoin versus the Turkish lira or Bitcoin versus the Venezuelan bolivar.
New data from the blockchain analytics from CryptoQuant just shows that miners are rapidly exiting their Bitcoin positions. 14,000 Bitcoin, worth more than $300 million at its current price, was transferred out of wallets belonging to miners in a single 24-hour period at the end of last week. And in the last few weeks, miners have offloaded the largest amount of Bitcoin since January 2021. The phenomenon is called miner capitulation, and it's typically an indicator that miners are preparing to sell their previously mined coins in order to cover ongoing mining expenses. Meanwhile, inflation is on a tear, and the cost of energy is hitting record highs as the war between Russia and Ukraine rages on.
The formal bank rate is 127 pesos to the dollar. The actual rate is 270. What's the difference? The difference is the bank won't sell you the dollars. That's why it's cheap, right? So Bitcoin is an option for anybody in the world that lives in a nation where they can't trust the bank or they can't trust the local currency. And that's the killer app for them. In that case, this is common sense, right? If I told you the currency was going to collapse in a month and you lived in Venezuela, you would keep 3 days worth of cash in the bolivar. You would keep a month worth of cash in the peso. You would keep a year worth of cash in the dollar, and you would keep the rest of the money that you owned in property. Go buy a car, go buy something. Because I'm telling you, right, that whatever you bought, if you bought 100 houses 5 years ago, 95 of the 100 are getting burned, and you'll have 5 houses in 5 years. So it's not complicated. So I think that the problem with all the currencies over the long term is the best currency in the world is going to lose 99.9% of its value on 100 years. The best. The dollar is going to lose 99.9% of its value over 100 years. Okay, so it's really just a question of what is your time frame. And if you look at the monetary inflation rate, in a good year for 90 years on average before 2020, it was 7% a year in the dollar, 14% a year in the developing world. And this is not controversial. Go study the history of currency collapses in Argentina, in Mexico, in Africa, and Russia's currency collapsed in 98. They all collapsed. So go study them and you'll realize that. So most currencies are losing 15% of their value a year, and the dollar is losing 8% of its value a year. But in 2020, we stamped down on the accelerator and the dollar started losing 16% or more of its value, actually 20% of its value a year for 2 years running. If you look at the M2 money supply, and that means everybody else started losing double that. And that's why you have riots in Sri Lanka right now, right? That's why you have riots in Argentina. That's why you have a collapse in all sorts of places, because the currency's losing, when it's weak, it's losing 40% of its value a year. When it's strong, it's losing 15 to 20% of its value a year. And the only reason that you're not panicked in the US is because the CPI is manipulated to create the lowest possible inflation number.
But the big story of the day in the crypto markets was Ether, the second largest cryptocurrency, which is picking up momentum in advance of a big upgrade now expected in September. Ether has accelerated its rally Monday morning, outperforming Bitcoin, perhaps an indication that the market is starting to take the network's upcoming merge seriously. Renewed clarity about the timeline of programmable blockchain Ethereum's highly anticipated merge upgrade, dubbed Ethereum 2.0, seems to have galvanized investor interest in Ether and its staked derivative on Lido Finance called Steth, offering a reprieve to the battered cryptocurrencies.
And so when Satoshi invented something that allowed you to transfer value from two parties without an intermediary, not only did Satoshi invent the ability to transfer energy in cyberspace, Satoshi invented the ability to manifest energy in cyberspace, something conservative. Well, people that are computer scientists don't understand conservation of energy. If I'm criticizing the computer science geeks, right? And this is not, at MIT, they make you study physics and thermodynamics, right? And mechanical engineering as well as computer science. But if all you did was study computer science and you never studied physics and thermodynamics and mechanical and aeronautical engineering, then you're lulled into this false sense of security where you think you can just make any rule and do anything because there's no conservation of energy. The reason that aeronautical engineering is a really good grounding to understand what money is or what crypto should be or what Bitcoin should be is aeronautical engineering is like the ultimate systems engineering discipline. You have to master computer science, computer engineering, mechanical engineering, metallurgy. You have to master chemical engineering, electrical engineering, control systems. You have to master ocean engineering, fluid dynamics, propulsion, all of these things, which are highly inconvenient for a computer scientist.
So, do you agree with Michael Saylor's take on Ethereum? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video, and thanks so much for watching.